Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Senior Index Specialist with Nasdaq Investment Intelligence. And for National Biotechnology Month, we are going to talk about the Nasdaq Biotechnology Index, one of our flagship indexes with our Nasdaq Index research team. Mark, it's great to have you with us. Welcome back to Trade Talks.
Thanks, Jill. Great to be back talking about NBI.
Yeah, and give us a high-level overview of NBI and its composition.
Yeah, so let's go through real quick what the top 10 look like. Right now, you've got Amgen at number one. Amgen, a really well-established player for several decades now in biotech. Gilead Sciences at number two. You may have heard of them as being the manufacturer of remdesivir, one of the best kind of most effective antivirals against COVID-19. Moderna, of course, I think everybody knows at this point with the very, very successful mRNA vaccine that they developed, probably the most effective vaccine we have on the market, up to number three. Regeneron, I mean, this is like a COVID playlist, right? Regeneron, very famous for developing the monoclonal antibody cocktail that President Trump was treated with. A bunch of people have been treated with in the hospital for very severe COVID symptoms. Then you've got other names like AstraZeneca, a UK, European global pharmaceutical company that recently acquired Alexion, which was previously one of the biggest members of this index. And then Biogen as well, a very big, important name that's been around for several decades. You can see on the right here, the concentration is, pretty high up there, not as concentrated as some other indexes that we see that are market cap weighted, but about a 50-50 split here in index weight between the top 10 and the rest of the index. And then if you look below that, US-based companies versus the rest of the world, about 84% of the weight here coming from US companies, but a nice sizable percentage, about 16% coming from companies based outside the US that end up choosing to list on NASDAQ, either as a primary or secondary listing in the US.
And Mark, while these names have certainly been in the news as we've gone through this pandemic, how did they perform relative to other benchmarks?
Yeah, so on this next slide, we're showing performance of NBI versus a couple, market-wide benchmarks with the S&P 500 and the Nasdaq 100 at the top there. There was a statistical tie pretty much last year in terms of price performance, about 27% up. And then what you see at the bottom of that chart, you've got S&P's Biotechnology Select Industry Index, that's SPSIBI, down 20.5% for the year in 2021. And then the Nasdaq Biotech Junior Index, which is only the companies with sub $5 billion market caps in NBI, kind of carved out as its own small cap index derivative of NBI. That index was down about 24%. You see NBI right there in the middle, right about at 0% price return in 2021. We kind of got into this during the last trade talks a little bit, talking about the reconstitution, all the really, really voluminous IPO activity that happened in 2021, continuing what we saw in 2020 with the start of COVID. A lot of those small cap, a lot of those recent IPOs really just had themselves an awful year in 2021, dragging the overall index performance down, even though on the right-hand side, you'll see that generally the performance here was positive. Moderna had another great year. Horizon had a great year, Regeneron and Gilead as well. On average, the top 20 names were quite positive. Even the top 10 were quite positive for 2021. The rest of the index quite negative. So a tale of two really indexes within the broader NBI in terms of performance.
And Mark, one thing that stuck out to me was the SPSIBI, the S&P Biotech Index, and that the divergence of performance that you had just mentioned. Tell us more about that index and what those subtle differences are with the methodology.
Yeah, great question, Jill. And it's a fair point to wonder, if you have two benchmarks for the same sector, the same industry, why are you seeing such a big performance divergence? And it really goes back to index construction. So as I mentioned earlier, NBI is a market cap weighted index with some capping on the biggest names. S&P's Biotech Index is an equal weighted index. It's got some modifications in there that modify the weights based on the liquidity of the actual shares being traded. But you can see all the way on the right of that chart at the top of the slide, you've got a much bigger difference in representation in the index as well. You've got 373 names now in NBI, almost double the 189 names in the S&P. So what you have with the S&P, you look towards the bottom of the chart, I've got the top 10 underweights versus NBI. So something like an Amgen that's weighted at over 9% in NBI is weighted at less than 1/10 of that in the S&P index at about 0.83%, despite being over $100 billion in market cap. And you look at the bottom of that chart, that BioMarin is a $16 billion company. It's got about the same weight in the S&P index as Amgen, despite having a much smaller market cap. So obviously, that's going to have a big impact, especially when you have a year where small caps generally are underperforming large caps, as well as when you have a year with a lot of IPO activity, some of which maybe got priced a little bit too high for public investors and had a big kind of correction work its way through most of 2021. That's why we're kind of going around and reminding people that, not all benchmarks are created equal. If you're concerned about that small cap, that recent IPO kind of exuberance, the correction continuing into next year, into this year, you really need to pay attention to the construction of these two indexes.
Those are all very good points, Mark. And we could see this on your last slide here, how, you could tell by the different chunks, pieces of the pie, just how that weighting is impactful.
Yeah, I mean, this shows it the clearest way that I can think to show it, which is the light green, right? If you look at the light green on the SPSIBI chart on the right, you see almost 3/4 of that index weight comes from companies with sub $5 billion market caps. That's why that performance tracked the NBI Junior Index so closely last year. NBI Junior, again, being the portion of NBI that is sub 5 billion market caps on a market cap weighted basis. You look at NBI on the left, you've only got 1/4 of the index weight coming from sub $5 billion companies, and it's actually pretty nicely distributed over the course of all those other buckets that I've carved out. Even the $100 billion plus bucket is not overly large. It's only about 19% of the index weight. So really, I told you it's a tale of two indexes, sub-indexes in terms of performance within NBI last year. It's really a diverse, divergent tale of two indexes, two benchmarks when you compare these to each other. And that's why, again, we continue to think that going on close to 30 years of existence here with NBI, this is the true industry benchmark. It's the most effective, most representative way to track this industry.
All right, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.